What's going on, guys? MMuniz here. Welcome back to the channel. In today's video, we're going to talk about an income ETF IDVO, or the Amplify International Enhanced Dividend Income ETF, which is pretty long, so we're going to stick with IDVO. Now in this video, we're going to discuss what IDVO is, how it works, what its holdings are, how the income portion comes into play. Hopefully, that's going to be able to tell you if it deserves a spot in your portfolio. And then lastly, as in all my videos where we review a specific ETF, I'll give you my personal opinions on it and what I'm doing personally. But just remember, I'm not a financial advisor. This video is just for entertainment. So what exactly is IDVO? Well, it's an actively managed fund that's going to provide monthly current income and the opportunity for capital appreciation. It's also the brother ETF of my personal favorite, which is DIVO or DIVO. So both of these funds are going to invest in large cap equity, but that's where it's going to differ a little bit because IDVO specializes in international companies. So you're giving yourself diversification to something outside of the US by investing in IDVO. So how does it do this? Well, it provides the income by picking specific dividend paying ADRs or American Depository Receipts. What does that mean? It's basically a way for you to buy shares of foreign companies on an American stock exchange. So it's not necessarily the shares, it's actually certificates, but you're getting exposure to these international companies. Now, in addition to the company's dividends, you're also going to get extra income from tactical covered call writing strategies. In other words, not only are you going to be benefiting from the companies making money and paying them out to shareholders, you'll also benefit from the fund managers writing options on the holdings themselves in the way that they think is best to provide the most income and still allow for capital appreciation. Now, there are a few things we do need to point out about this fund. One of them being it was only made less than a year ago. So it came out in September of 2022. There's not many assets under management, only 23 million. And we have a total of 65 holdings with an expense ratio of 0.65%. Now, compared to some of the other income ETFs, this is pretty comparable. However, it is 0.10% higher than DIVO itself. So as I talked about, you're going to get two potential income streams, which are going to come from your dividends and then also from the premiums they receive from their covered calls. Now, they do seek to lower volatility, but it's important to note that they're not doing anything to actually protect your capital. All they're doing is providing income on a monthly basis, which kind of helps offset your overall loss, especially if you're reinvesting dividends. Another thing some people will say is that dividend-paying stocks, some of them, the large cap quality companies, are going to be a bit more stable than smaller cap growth companies. And then we already talked about professionally managed in terms of active management. So if you like actively managed and don't mind paying a higher expense ratio, then this can be a bonus for you. So you may be wondering, with a fund so new as this and it's international, why would you invest in something like this? Well, some people believe that adding diversification to international stocks can be a huge benefit to your portfolio in terms of risk protection. Also, one thing we like to say a lot is that past results do not guarantee future results. So just because this S&P 500 has been kind of the gold standard for investing and setting and forgetting your money, we may find in the future that international stocks grow more because there's more room and more opportunity to grow. I could be completely wrong there. That's just something that some people believe. So if you are interested in diversifying out internationally, that 6% annualized dividend, it's typically going to be around that, at least that's what they're expecting, around 3 to 4% from dividends, and then 2 to 3% additionally from their options income. That will help offset some of the losses if they do occur if something happens on a global scale. So let's take a look at some of the holdings and the sectors. So when it comes to the countries where these companies are from, you're going to be ranging from Spain to India to Denmark, China, all over the place, which makes sense. And one thing you'll note is USA is not included in this. Now, it's important to note that when we go to the sectors, the fund managers from Capital Wealth Planning do their best to determine which countries and which sectors are outperforming relative to their peers. So if we look at the light blue here, they're considering energy one of those high performance sectors that are going to pay dividends for a long term moving forward. They're not just looking for the highest dividend, but they want to find companies that appear to be strong and the ability to remain strong for a long period of time. They also weigh heavily on materials, information technology, and even financials. And then there are the other sectors as well. Now, if you want to see the top 10 holdings, you just go on their main page and you can see them right here. Petroleo, Brasileiro. So I don't know what company that is. Coca-Cola, I do recognize that. 10-cent holdings, Banco Bilbao, American Mobile. So some of these are going to be other languages because they're coming from other countries. One that stands out immediately to me is Taiwan Semiconductor. That's just because it's actively traded by day traders, so it just sticks out to me. But, at the end of the day, if you want to see all the holdings, you can go on in there. But Now, at the end of the day, if you want to see all the holdings, just go ahead, click on View All Holdings, and you can review and determine if this is for you. But with that being said, it's important to note that this is an ETF that's actively managed. So you're paying for someone else to do that work for you. That's one of the main reasons that I personally try to stay away from individual stocks and only invest in ETFs. I dollar cost average on a weekly basis into the ones that I personally like. That way, I don't need to do fundamental analysis. I don't need to analyze balance sheets or look at company financials. I don't need to know anything about those international companies. I'm just allowing Capital Wealth Planning to do the work for me. So in conclusion, when it comes to investing in IDVO and if it deserves a spot in your portfolio, obviously that's going to be up to you to decide. If you like the ETF DIVO and you're looking for more diversification outside of the typical large cap dividend paying stocks that you're going to see in SCHD or VYM or the S&P 500, then maybe you want to branch out this way. That's completely fine. Now, when it comes to me in particular, it's kind of interesting because I actually love DIVO, but I probably won't buy this ever. When it comes to international, I do have a little bit of international exposure, but I just use the basic ETF VT, the Total World Stock Market Fund. It has a super low expense ratio. There's no covered call writing or options or anything like that. All it is just holding all the companies in the world. So if some emerging markets start to outperform in the future, then I'm going to capitalize on that. If Tesla becomes the biggest company in the world, then I'm going to capitalize on that as well. Doesn't matter if they're dividend paying, growth companies, tech companies, none of that matters. VT has it all. Now, that's just my personal opinion. Maybe you're in retirement already. You want actively managed funds that are going to give you higher income that makes it easier to manage your finances on a monthly basis. Maybe that's for you then. But the point of this video was just to get you guys thinking, show you some other products that aren't really talked about on YouTube that much. And at the end of the day, it's up to you guys to do your own research and determine what's best for you and your family. Now, if you're still watching the video, make sure you smash the like button, subscribe to the channel. We try to do weekly videos on anything related to personal finance or fitness, though I will say I have a very busy life lately with my 3 beautiful daughters, so it's getting a little bit hectic. But with that being said, I hope you guys have a great rest of your week. Thank you so much. Take care.
For this poopala. He'll be entertained for the next 3 hours.
Oh yeah.